Hi there, welcome to this week's market analysis. So as usual, what we're gonna do in this video over here is to quickly walk you through what has happened for the past week, and we're gonna look into this week's calendar over here. What are some of the events you want to take note of, and then after that we'll go on to the charts and to share with you some of the major pairs, my analysis, and where is the opportunity that you might want to keep an eye on for the week. So without further ado, I'm gonna jump straight and share with you my screen, and we'll talk from there. Now over here, quick summary. What you can see is for the past week, one of the key important data that came in was the pound CPI year on year, and we kind of see inflation peaking very high on at the UK side, coming in at 9.4. That's gonna definitely put pressure on Bank of England, okay, to continue its tightening and of course start to hike rate perhaps a little bit more aggressive. Okay, the other event that you might want to take note of that has happened last week is on the euro side of things, which has ECB raising rates to 0.5. Again, this is historic because it has been very long since the ECB actually decided to increase interest rate. Okay, so this is definitely going to provide us some opportunities, at least for the short term in the euro. Okay, we'll take a look into the charts later on as well. Okay, so those are the key main ones that I would say it's more important that has happened last week. Just a quick summary in case you missed any of this. Now looking forward into the week, we do have Wednesday on the Aussie, which we have CPI coming in. Okay, and of course we have the trim mean CPI as well. I think overall you can see that Australia over here, inflation pressure is not as strong and as urgent as compared to perhaps in the US, Europe, as well as the England side, right, UK. Okay, but I think this coming week, the most important aspect to take note of is none other than the FOMC statement. Okay, and of course over here you can see the market is expecting the Fed to increase by another 0.75. Whether we're gonna see an exact 0.75 hike, or would the Fed be more aggressive and decide to hike it by 1%, definitely is gonna provide some kind of volatility in the market. Okay, so if you're trading for this week, do take note of that. Though this is of course related to the US. But US being the global reserve currency is going to have an impact in the entire financial market as well. Okay, so do take note of volatility going into FOMC if you're trading within the week. Now with that, let's take a look at the charts, mainly on the technical aspect, and we'll cover the major pairs over here, okay, and highlight some of the opportunities you want to keep an eye on. Now to start off, we're looking at the dollar index over here. Okay, on the 4-hour time frame, we kind of see a little peak around 109.30, and we did have the very first impulse push to the downside. And as of now, I think the market is doing a little bit of a consolidation. So if I put in a bit of the Fibonacci retracement over here, we can see that the 50% mark comes in around that 107.70, and the 618 comes in around 108.10. Okay, I would say if the market were to pull back a little bit more in a very corrective manner, we can at least expect one more wave to the downside, and that kind of signify a potential weakness in the dollar. Perhaps FOMC is gonna deliver below expectation, or perhaps we have the term get into the trade before the news, but when the news release, you want to sell it, you want to liquidate a position. So perhaps that might also be the case for the dollar, okay, where we might see a little bit of a push up before FOMC, and when the actual news comes out, people will probably get out, liquidate a position, and we might see a weakness in the dollar, right? Having said that, of course, nothing is going to be 100%, okay, but for me, going into this week, I'm going to be looking out for sell opportunity in the dollar itself. Okay, so that actually translates to a lot of major pairs right now showing some decent opportunities that we can take advantage on. First up over here, we have the euro, okay, which is kind of inverse to the dollar index. We had a little bit of a push up right now is doing a bit of consolidation, so same thing over here around that 50 and 618 Fibonacci retracement will probably give us a very ideal sweet spot for potential buy opportunity, and we can expect one more push to the upside, right? Kind of give us a 1, 2, 3, or in terms of Elliott Wave, that will be a WXY or ABC. Okay, so euro dollar, definitely a very clear structure and opportunity for the week. Personally, I'll be looking for a buy trade opportunity. Okay, and of course, in terms of the pound, kind of similar to the euro dollar over here as well, though the move to the upside is not that impulsive. Okay, we do see a very clear structure as well, where we have this breaking the diagonal, and right now it's doing a bit of a consolidation, so we are still expecting one more upside, right, which is in line with the weakness of the dollar that I'm looking out for. Okay, so euro and the pound, in terms of the major over here, is quite straightforward. Okay, do look out for buy opportunity if you're interested in that. Okay, but of course, you need to obviously have a proper strategy to get involved in it. You know, you need to know where you're going to put your stops. You need to manage your risk accordingly, having said that. Okay, Aussie dollar also have a very clear structure as of today. You can see that the market has indeed break out of this ending diagonal structure, and as long as the market is able to maintain above this low, around 0.6685, I would be maintaining at least a short-term bullish outlook on the Aussie dollar. Okay, now of course I'm not going to buy into this. I think right now we are seeing a little bit of a divergence building up, and that indicates that short term here, perhaps this week, we're going to see the Aussie starts to consolidate a bit, going into a correction, and if that happens, perhaps later, you know, closer to the end of the week or even maybe next week, we'll then look for the upside after that. Okay, so Aussie and Kiwi, I would say you might want to be a little bit patient going into this week, because of how it's developing right now. I want to see a clearer corrective structure develop before I'm going to take that trade. Okay, so in terms of like if you rank it right now in the major, because all of them, as I've covered, we are looking for upside. Okay, essentially selling the US dollar. You need to manage, of course, your risk exposure, and for me, if I were to rank it, I think euro dollar and the pound dollar would be a better setup. I would definitely put more emphasis on that, and Aussie and New Zealand over here will probably need to give it more time, a bit more conservative in my entry approach as well. Okay, next up we have dollar Canadian. I think dollar Canadian is also a very clear development and structure as of today. Okay, not only we have this little push down, and of course if this does a bit more in the pullback towards the 50 and the 618, somewhere around 1.3020 to 1.3070, I think that's a very decent area to look for sell. And if that were to happen, we kind of had a very nice kind of head and shoulder development as well, right? In terms of the left shoulder, you can take it here, or even you take it here. It's still overall a very nice kind of reversal pattern. Okay, so you have multiple elements coming in for the dollar CAD. Of course, given, right, the prerequisite is that it's going to develop in a very corrective manner towards the 50 and 618. Then I'll be definitely looking for a sell. And of course, having said that, if you sell here, your primary target will be at the neckline of this inverted head and shoulder. That would be your perhaps target 1, and if you want to go for a standard target, you can look for, you know, very traditional way of measuring the neckline, and then you duplicate it 1:1. Okay, so I think dollar Canadian is definitely one of the pair to keep an eye on as well. Again, the direction is quite similar. We are looking for opportunities in the weakness for the US dollar over here. Okay, now dollar franc, I would personally suggest to be patient and stay out of it for the week, okay, because the move to the downside seems a little bit sharp, quite impulsive as of now. Therefore, personally, I wouldn't want to be jumping into a trade. Selling it is not really that ideal as well, because from a wave perspective, as long as the market is still maintaining above this recent low, around 9495, as long as the market is still maintaining above here, I wouldn't want to be selling it. The downside might not be very attractive as well, but you know, the momentum is strong to the downside. It's not the buy yet. Okay, so I'll be patient. Perhaps this would come back down, retest the bottom over here, giving us kind of triple bottom formation before that rejection. So we need to give it time, and we need to just be patient on the dollar front. Now, last one here on the major currencies, we have the dollar yen. Very nice break as of Friday, okay, just before the market closed. Very impulsive break as well, and you can see this trend line over here has been established since mid-May, or I would say closer towards end of May. So it's actually quite a significant break to the downside, right? And if I bring you to even on a higher time frame on the daily, you can see dollar yen has already been extended quite a lot, and you know, we're not going to be surprised if the pullback is going to be a little bit deeper, okay? And from on the daily time frame over here, we can see the next previous support, okay, which was previous resistance, perhaps now turned support. Key level here is going to be around 131.50. So the downside is pretty huge, okay? So do keep an eye on the dollar yen. Obviously, I wouldn't be personally selling it here. I want to wait for at least kind of like a pullback, a corrective structure to kind of confirm the probability is higher to the downside, and I will then take that trade, okay? So this, you probably need to give it a bit more time and see how the market develop from here. Good. Now, in terms of gold, gold is also a very nice structure at this moment, right? I mean, this week here, a lot of all these major pairs are giving us a very decent, clear structure, okay? And gold over here, we can see we have an ending diagonal, and price after tagging the low around 1680 did a very strong impulsive push to the upside. So what I'm waiting for now is that if market does put in a little bit of a corrective structure over here, perhaps coming back towards a 50 and 618 Fibonacci retracement at 1710 or 1700, that would be a very decent area to look out for a buy opportunity, with our first target at the previous resistance, previous support turn resistance at 1805. Okay, so I think gold here this week is definitely something that I will keep an eye on too. Okay, now last one here to cover in this video, we have the S&P 500. It did break above that previous high at 3950 just before the week ends. However, we can see right now that this breakout is a little bit in the corrective manner, where you don't really have a lot of momentum to follow through as of now, and most of the time this can indicate that there's a good chance this will probably reverse and come back, okay? And of course, you know, if we see it from another angle, I'm gonna put in a little bit of a channel over here, okay? You can see that we are reaching the previous top over here, right? So if I were to just remove and change a little bit of a perspective over here, you probably see it in a very different light, right? So this one here, probably a little bit more upside, but we might face a little bit of resistance at the top of this channel, and then we can still see one more move back to the downside, okay? So in terms of S&P in general, the US equities, you want to be careful, you know, because some traders would probably say, oh, it broke that top, let's all jump into the buy trade. I would say be careful on that. You want to really observe, see what's going to develop next. Now, to really confirm and have a higher probability that this is really indeed going up, you want to see at least kind of like a pullback, forming kind of corrective structure like that, and then that will increase the odds of moving up. Okay, so be patient. In terms of S&P, I'll maintain a very neutral perspective until I get more clarity from the charts itself. So that's all from me for this week's video over here. I hope it can give you a quick overview of the market for the week, some ideas, some insights, and you know, opportunities that you might want to keep an eye on for the week here as well. So all the best to your trading, and I'll see you guys real soon again. This video is partly sponsored by Zenfinix, bringing you the weekly market analysis. And of course, if today you would like to take your trading to the next level, or if today you're very new to its Forex trading, then we do have a collaboration together with Zenfinix, where you can actually get the 4 Trading Pillars Masterclass for free, fully sponsored by Zenfinix. All you have to do is click on the link in the description and find out more how you can actually get access to this masterclass for free.